fighter. You know when you get
Hello,
to this
it's
stage
Mr.
in the fight, you
Intermarket
get
Analysis. Just bringing you a review of the Euro USD for Monday, the 9th of December, 2013. Okay, start off first of all, a bit of a shock really. Darren Barker's just been KO'd by Mr. Sturm in Germany, Stuttgart. Not sure if you're a boxing fan, I certainly am. Can't wait for tonight's bill in America with Zab Judah and Paulie Malignaggi and the same chap before, Ricky Hatton, and we have Devin Alexander. So, but anyway, this is a bit of a shock this week. This chap got Darren Barker fighting for a world title fight, and he got knocked out in the second round, which a bit upset really. Just watch it. So I thought, okay, I'll do a video of the Euro USD. Okay, folks. So, okay, going back to the Euro USD. Okay, let's have a look at the fundamentals first of all before we start going into the technicals. Okay, so arguments for the Euro USD to go higher. What are they? Okay, Mr. Draghi was expected to be dovish this week. He didn't. Okay, he came in and he talked the euro up from my perspective because he was anti-LTRO2, he was anti-QE, he was anti-deflation. He even denied to a certain degree that it wasn't even transparent, and wasn't, well, they've already compared it to Japan, saying it's not like Japan. So yes, so there was no mention of QE, there was no mention of rate cuts going forward. He stated it was an isolated incident or event, the last rate cut. Okay, and they remained neutral, policy neutral. So obviously a lot of individuals were buying into the market, expecting QE and expecting negative rates and expecting an LTRO2. That's why you had German DAX rallying 2 weeks ago to 9,400 and light volume. Okay, and obviously then only dumped the following week, which was last week. The DAX was down 300 points, okay, 400 points. So that's the reason why. So basically the arguments there, obviously from the ECB's perspective, you have a central bank that's doing nothing now, that's neutral now, okay. Hence the reason why the Euro USD continues its march higher, hitting the 1.37 level. Okay, okay. So the arguments for the USD. Let's have a look. Okay, so USD, the economic data has been good. GDP data came in good. ADP data came in good. Non-farm payrolls data came in good, but not as good as everyone expected. The whisper number was 250,000. Only 203 came out. So 203k. So that was another, well, that's certainly, well, definitely bullish, but obviously not bullish enough, okay? More like a Goldilocks type of economy where it's not too cold and not too hot. So, but the added caveat, and this is something that I was discussing in my mentoring on the weekend, well, today, I was teaching one of my students, and we were discussing the fact that the added caveat, which a lot of people missed out on, was the inflation report. A lot of the central bankers came out and stated that they were concerned about low inflation. Okay, the inflation in the US is currently 1.1%. They want it near 2%. Okay, this chap wants it near 2%, above or below. So okay, yes. An additional thing, they also mentioned the fact that the current target is, well, they hit 7%. In terms of the unemployment rate, they are going for the target is 6.5%, but the Fed policymaker, well, one of the Fed policymakers came out and stated that they were still not impressed with the actual economic data. So, well, the actual jobs report, they weren't impressed at all. So they want it much lower than 6.5%. Added the fact that they want inflation rising higher at near 2%. So that's one of the reasons why Larry Summers was actually, well, basically forced out of the running for the Fed chair, because they wanted a massive dove by the names of Miss Yelenin, okay, who was basically going to come in and inflate markets higher. So given the fact that we have the inflation at 1.1%, that obviously leaves room or scope for more easing. Therefore, December taper is definitely off the cards, given the fact that you've got 6.5% unemployment rate target, plus you've got a 2% inflation target, okay, which certainly won't be hit anytime soon, okay, especially given the fact that commodity prices have come off recently, okay, with the oil price falling and gold falling as well. So generally that's deflationary anyway, okay. So expect them to be inflated. Certainly expect them to move higher. That's one thing. Certainly keep an eye on commodities, could potentially move higher, given the fact that it's only 1.1% more QE obviously helps commodities. So that's a conundrum. Okay, so given the fact that we can only move off what we can see or what we observe, certainly December tapers are out of the equation. Therefore, US dollar is going to get spanked once again. Okay, if the US dollar gets spanked, what does that mean? There's more QE. You can buy the effing dip, okay, as a state, and Mr. Yellen, Mrs. Yellen, or well, it looks like a Mr. anyway. Yeah, Mrs. Yellen and Mr. Bernanke has got you back, basically. Okay, that's the conclusion. So another conundrum. Okay, so but given the fact that we've got European indices under pressure, why are they under pressure? Because of a higher euro. Okay, so central bank and policymakers could certainly intervene at any time and cause the euro to fall. So you are vulnerable to those external exogenous shocks. So keep an eye on that as well. Okay, so but we can only trade what we see, and what we see at present is US dollar weakness and euro strength. Okay, so let's have a look at this chart. Okay, from a weekly perspective first of all. So weekly chart, key trend line resistance. Okay, this is your key pivotal trend line resistance. Them two levels there. Keep an eye out for them. Okay, now there is an argument here for a H&S formation. Okay, provided the 75% is held. 75% is 1.37, so bear that in mind. So H&S formations, basically the way in which I've been taught by my teachers, okay, especially at InTheMoneyStocks.com, Nicholas and Gareth Santiago, is provided the market holds a 75% resistance. And also, according to Mr. Balowski's website, according to his book, Encyclopedia of Chart Patterns, okay, Thomas N. Bulkowski, sorry, okay, basically, provided the right shoulder holds 75% resistance, expect the H&S to play out. Okay, if the right shoulder breaks 75% resistance, then you expect a double top. So double top is 1.3830. That's exactly where we're going on the euro. Okay, obviously you've got the trend line resistance. First one is at 1.3780, and the next level above is going to be the upper channel here that we can observe, which is around the 1.4 level. Okay, so provided it gets to 1.4, that's when you may well see some action by the ECB to lower the euro. Okay, why is the euro being bid? A lot of talk in the background with regards to China diversifying its assets going into January. Obviously a lot of money flow going into European equities as well. Okay, so that obviously is bidding up the euro as well. So, and adding the fact that you've had strong economic data out of the eurozone. Okay, so recently the spate of economic data, I mean the PMI numbers this week were good. Okay, unemployment numbers are starting to drop. Okay, and again that supports the euro. Okay, so certainly bear that in mind, and the fact that all these doomsdayers, etc., about the euro collapsing and so on and so forth, they've obviously been proven wrong. Okay, so, and they must be licking their wounds on their massive short positions that are being squeezed out consistently. Okay, so certainly keep an eye out for that on the weekly chart. Remember this H&S formation, provide the 75% holds. Given the fact that we've had the inflation report, which is the added caveat, I can't see 1.37 holding as resistance. Expect this to go higher, and I'll explain why I can't see 1.37 holding as resistance and why I expect 1.38. To be honest with you, I expect 1.4. Okay, certainly 1.4 on the euro is achievable. Okay, and we should get that probably by the end of December, if not before. Okay, so keep an eye out for that. Okay, so daily chart. Okay, so we're in this bullish channel at present. We are in the upper channel resistance. Again, like I said, you're in that 75% resistance. You've got historical resistance here at the 1.37 level, so watch out for that. Excuse me. Okay, oh, yawning. Okay, long day. Okay, so keep an eye out for that, okay? And that's all we can see really on the daily chart. Okay, let's have a 4-hour chart. 4-hour chart, again, looking bullish. You've got a bottoming tail, and the market seems to be going higher. Next level certainly seems to be the 1.38 level and higher. Okay, 60-minute chart, I can't see anything bearish there, to be honest with you. Higher highs, higher lows, innocent until proven guilty. I expect the move to continue upwards, okay? 10-minute chart, again, so to be honest with you, a lot of noise there, to be honest. But what can you see? Higher highs, higher lows. There's no argument there for the market to reverse unless you want to hypothetically and superimpose your own judgment and opinion on the market, okay? Respect price action and respect the tape for what it is. Okay, embrace it. Okay, and don't fight the trend. Okay, so that's basically the summary of all the time frames that I observe. Okay, now let's have a look at intermarket analysis. Let's have a look at the alternative variables that I observe in order for this euro move to continue higher. Okay, the first variable I look at is the euro GBP. So what do we see in the euro GBP? We had lower lows, lower highs. All of a sudden we've had no more lower lows, we've had no more lower highs. Okay, we've actually had a high equal to the previous high, so based on the price change principle, expect an inverted head and shoulders pattern, which I expect this to occur, and I'm expecting on the euro GBP easy target of 0.85. okay, that's something that I may well introduce into my fundamental analysis service. There are probably 2 trades that I'll probably add in, and I'm expecting 0.85 on the euro GBP going forward. Okay, especially given the fact that the GBP is now into resistance. Okay, so if I look at GBP USD, where art thou, GBP USD? Okay, where art thou? Here we go. GBP new, GBP Aussie. That's not the one that I'm interested in. Come on, come on, come on, come on. Where art thou? Where art thou? Where art thou? Art thou missing? Art thou AWOL? I'll find it. 1 second, folks. There you go. Okay, right beneath it. Okay, so GBP USD. So where is GBP USD going? Okay, so ever since the double top that we had in the 60-minute chart, we've obviously been moving lower. Okay, and we've broken out. We certainly have broken out at present. Let's have a look at the weekly chart. Okay, so weekly chart is holding that resistance. If I put in a doji, excuse me. Okay, so yep, so you do have an inverted head and shoulders pattern here, but given the fact that you've had a lot of movement regarding the FLS scheme, so why has the sterling rallied? Sterling rally has been predominantly due to money inflow playing the property speculation, obviously. Given the fact that the FLS scheme is no longer there and they're trying to take the air out of the property market, that should obviously hit sterling. Okay, and also obviously given the fact that all the good news is all factored in, etc, etc. So it's holding this resistance level here. We could potentially come back for a retest around the 1.61 level, probably lower, before we do eventually move higher. But again, that's certainly something that needs to be considered and looked at in more detail. But yeah, certainly a weak doji candle on the weekly there. Okay, so daily chart at the moment, we are struggling ever since that topping tail there. Okay, looking for a potential retest of the previous resistance equals support, so keep an eye out for that. Okay, let's have a look at the 4-hour chart. 4-hour chart obviously double top. Now you've got a potential H&S formation, so there you go. Okay, so you can certainly draw that in right now whilst we're here. Let's have a look. So this is not looking good for Mr. Sterling. Okay, so you got double top there, right shoulder in, down, bang, down we go. Okay, looking at 1.6183, which again helps the euro GBP. If it helps the euro GBP, it helps the euro move higher. That's the way in which the market works. Okay, now let's have a look at the euro versus JPY. Okay, so let's have a look at what this chart is doing. So at the moment, daily chart at the moment certainly is bullish. Okay, so what can you do? You can't argue against that, folks. Look at that, broken out of all the resistance on the weekly chart. Daily chart, one hell of a bullish engulfing candle, making new highs. How can you argue for euro to fall versus the Japanese yen? You can't. Okay, literally you can't. There's just no argument. Full stop. Just literally pointless. Okay, just stop wasting your time. Okay, stop wasting your time. Now this is very important in terms of the market itself as well, in terms of the US market, so I'll come on to that later on, but for now we're just discussing the euro USD. I'm not going to digress, something that I can do, but I won't. Okay, next one, euro CHF. Where are we? Okay, euro CHF 10 minute, obviously you can see there's a bottoming tail there. Euro CHF, what do we see here? Downward sloping wedge pattern. Okay, what happens here? Generally tend to break northwards, and that's exactly what we expect to happen here. So we're into support. So if Euro CHF is into support, what do you think will happen to the euro? Move higher. Yep, okay. So if Euro CHF is into support and the euro moves higher, what happens to the euro USD? We go higher. Okay. Now let's have a look at another pair. Let's see if I can find another pair on the euro. The one that I tend to observe. Let's have a look. One second, let's see if I can find this. Okay, I can't find it at present, so I'll leave it at that for now. Okay, so that should be a good summary. Euro CAD generally is the next one I observe, so that's something that you can certainly have a look at in your own time. Okay, there are other variables that I can go into, but again, the video will be too lengthy. I think that should summarize it. So basically, conclusion, expect 1.385 in the euro, 1.4 this week, if not next week. Okay, and euro certainly is looking bullish and looking to move higher. Okay, so risk on, risk off, wax on, wax off. Goodbye now.